So as far as options are, they're on my high list of favorite things to do. So you can do a lot of things with options. Now, primarily, I'm only going to be talking about these bottom three. So you can buy just straight out calls. You can buy puts. You do cash secured puts, which is what, the primary focus is going to be on for this strategy, just because it's one of the safest ones as far as not straight out gambling. You can do poor man's cover calls, regular cover calls, and then spreads, which spreads, that's more of a day trading strategy that I use it with. But regardless, you can do it for, swing trading or, monthlies, yearlies. But I keep it for like day trading. And again, returns can be as low as 10% to infinite, just because you can buy straight out calls and puts once you really know what you're doing. So I do have this paper trading account that I like to use for my demonstrations. And I use this a lot for practicing strategies. As soon as this comes up, I wish it showed my return, but I think it's because it's Sunday. But I'm up $93,000 over a month and a half or so. So it's pretty much right here. But it's $100,000 margin account and then $100,000 IRA account. But essentially, as far as cover calls go, cover calls and selling cash secure puts. So the reason why I say 1,500 is because there's two stocks I like to do it on. One of them is American Airlines. So we'll go to them first. And then I know this coming Friday is September 26th. So these numbers are going to be way off since it's the weekend, but we're just going to use them for demonstration purposes. So let's say this is a stock you do like, but regardless, when you're doing cash secure puts, you need to be able to cover 100 shares worth of the strike price. So for demonstration purposes, this strike price is at $12 right here. Right now it's going for 8 cents over the weekend, which I can tell you as soon as Monday hits, there's going to be probably a lot more than 8 cents. But that means 8 cents times 100 shares is $8. And $12 times 100 shares is $1,200. So essentially you need $1,200 to be able to do this play. So minus the fee, at least that's charged on Thinkorswim, is 65 cents. So together you're making $7.35. Oh, hold on. Let me change this to the IRA. And then to cover this, you need $11.92. So if you bring out the calculator, you take this 735 divided by 11.92. So obviously I know this is low, but this is 0.61%, so half of a percent basically. And you times that by, let's say you do this 4 times a week, that's 2.4% a month. And you times that by the year, that's 29% in a year. So just to recap again, basically what I did right there. So you're basically telling yourself like, hey, I don't mind owning American Airlines at $12 a share if American Airlines goes under $12 by September 26th, you will have to use that $1,200 collateral to buy 100 shares worth at $12, which comes out to that $1,200. And you'll essentially be owning 1,200 shares of American Airlines if it goes below $12. If it doesn't, you keep the $8 or the $7.35 credit. Now, let's say it does, close under that. So I do have this spreadsheet that I made. Going off this chart that I have right here, man, my computer's going so slow. So let's say you do a cash secure put on American Airlines. You buy one contract at the strike price of $12. It expires that week. you got the 8 cents premium, which was $8. And on Thinkorswim, the fee is 65 cents. So that bring your grand total to $7.35, and your collateral that you need is $11.9265. So that week you make $7.35. Now let's say you got assigned, meaning it closed below the $12 strike price. So it can close at 11, it can close at $9, but we're not gonna go too deep into that. Regardless, the strategy is gonna be the same. You now own American Airlines at $12 strike price. So you bought essentially 100 shares at $12 minus the fee that you already had got paid. So you still have it at $11.92. Now that same week, so this is week number 2 after you got assigned, you do a covered call at a $13 strike price. So $1 above. Now, right now, if I go to Thinkorswim, it'll say it was 8 cents. Again, when the market's open, it's probably going to be completely different, but we're just going off these weekend numbers. So you can see right here. So the 13 strike to sell this call is 8 cents. So pretty much the same thing that you bought it at, which we'll see what it is on Monday. I'll do a live example, but come back to the spreadsheet. So 8 cents, 65 cents fee. So again, you collected $7.35. So that brings your total to $14.70 of what you collected so far over 2 weeks. Now, let's say that week ends and it actually closes at $13 or higher. That means you sold your $12 for $13. So you collected a price appreciation of $1 per share. So that brings your total to $100 and got that off. $107.35. So total, you've collected $107.35 plus the $14.70, which brings you to $122.05. Now, here's the numbers, at a wide scale. So let's say you did this every month or every week for a year straight and you never got assigned. And going off these numbers, that bring you to $29 a month, which is $352 a year, and it's about 29% annually, which is still great. If you did get assigned once a month, those numbers came out to $136 a month, $1,600 a year, or 136%, which again is, you're not going to be getting assigned that much, but let's say you did get assigned once a month, cool. I mean, more money, right? Now, what I think is expected is you're going to be probably around $45 a month, because when you do the covered call, you usually get more. And then usually, depending on what time you buy these, the premium to sell a cash secure put is a little bit more than around $10 or so. So that'll bring your yearly average to $540 a year, or 45%. So if we go to the calculator, so going off the calculator, you started with 1,200, 45% a year, compounding every week for the next year straight, and you're still depositing $100. You'd have made additional, $1,200 in deposits, an extra $960 in free money, aka the interest or the premium collected. So your new balance would be $3364.17. And since you compounded, that's 56% annually. Now, my rule of thumb is it's either house or 10 years, whatever comes, first for you. Meaning you're doing this for the next 10 years straight, or you're doing this for the next X amount of years straight until you can put a down payment for a house or another house or however many houses. So if you go off 50%, and let's say the next 5 years you're doing this, that's more than enough for, a $400,000 house right here. So ideally, this is one of my favorite strategies to do, just because essentially, the more money you get, the better stocks you can do this on. So again, if you wear Nike all the time, start with Nike, see how much it'll cost or how much you'll need to do 100 shares of that, and just go start selling premium on it and collecting your shares. And don't even do the cover call part, since you like that company enough that, when it goes up high enough and you are ready to sell, then you can start doing cover calls. So that's that part. Now spreads are a little bit different, like I said, because you don't get the luxury of owning the shares if said stock goes below, your strike price. Of course, my computer wants to go slow. And then again, usually I do spreads for same day trades, but let's say you did it on AAL, which I wouldn't recommend because it's not really expensive anyway. So you do the same thing. You sell a put, and then you'll immediately buy the next put. So you're selling one put and you're buying one put. And as you can see, it's only $44 instead of that, $1,100 or $1,200 that you needed. But you only collect $4. So it's a give and take. Costs a lot less to get in, but your percentage gain is a lot more. So obviously, you can already tell that's about 10% right there that you make. And you do that every week, that's 40%. Now, excuse me. Once you get good at, reading charts and you understand like lows and highs, supplies and demands, this is a real strong strategy that you can do. And you're not risking nearly as much. So I'll say, even if you win, what? So what is that, 44? What I was trying to say is, even if you win, 10 times in a row, now you made $44. But as soon as you lose once, boom. It took you all those, a month or so, or 2 months to make $44, and you lose one time, you lose $44. So you lose all your gains, let alone if you lose on the first try. So it is a big risk, considering, you don't know what you're doing right now. So I'll say stay away from spreads until you get more advanced. But doing spreads is how I made this big gains right here from this, paper trading account. But again, I'll go more over spreads in detail once you understand, because deltas do help. And to explain deltas, essentially they're saying 0.3% chance or 0.23%. So the way I like to read this is basically you have an 80% chance of the stock not going below $12. And here's this right here, you basically have a 90% chance of the stock not going below $11.50. And that's deltas real quick. But overall, that's options. Mainly, the thing I like to do is the will strategy, where you just sell, naked puts. If you lose, whoop-de-doo, at least now you own the shares. And then you can turn around and just do covered calls and sell those shares. So a lot less riskier than doing spreads, and a lot more safer than just buying, or not more safe, but less volatile than buying volatile assets to get those gains. So the next one we got is crypto, which is my favorite right now, where I'm getting most of my gains from. And I'll show you my strategy I'm doing on that. So nothing crazy. Oh, I forgot to go report. Let me go report man's cover calls. So let's bring this back up. So poor man's cover call is, let's say you want to own 100 shares worth of a stock, but you don't want to buy it outright. It's the same thing. You can buy a leap. And for me, I like to go out as far as possible. So 852 days, and I'll buy at the money. So I'll spend, what, $390? So I'll spend $390 and still have the same, you know what? I'll even go deeper in the money. So I'll say about right here. The closer you get to 90 deltas, the closer you have the same effect of owning actual 100 shares. So you spend $925 to control, 100 shares worth of AAL. So let's say I now own this leap for January 21st, 2028. I can still treat that as me owning the shares, and now I can continue to sell every week. I can sell, the cover calls. So it's the same. I'll say you have the same downside though. So let's say I own the $9, and for whatever reason, American Airlines just runs to $15. Unless I roll over my $13 strike, I'm gonna lose out on a bunch of premium because now I have to sell. I have to close out my leap to be able to cover this $13 cover call. So you're still losing the premium that you would have gained from the amount of, whatever that gain is from this $9 strike all the way up to $15 strike. Probably not hundreds and hundreds and hundreds of dollars, but it's still a big chunk that you'll be losing out on. So again, another strategy that I wouldn't suggest doing until you know how to do rollovers effectively. But it's at least a way to, own effectively 100 shares worth without paying $1,200. And leaps are still good. I just buy leaps without even worry about doing the cover calls, to be honest with you. And just wait, next year or two, and treat it as owning the shares. So again, same thing. Wasn't trying to go deep into leaps and poor man's cover calls because again, it's a strategy that you don't want to do until you know how to effectively roll over your calls. And again, we can go over those in, a future video. But that's options for you. Now we can go over the crypto section, which again is still my favorite. It's one of the ones that I'm doing the most right now between crypto and the prop firms and of course my own personal day trading account. So here's a quick recording that I did at market open today. So it's been open for about, an hour or so. So going to SPX, and I already did my, charting just to see exactly, where I want to buy or sell my put for today, my credit spread. So here's just me checking it again on this chart. Let me fast forward a little bit. So it goes to today's day, September 22nd, 0 day expiration. And then what I'm doing is I'm selling one put and I'm buying the put directly under it. So just deposit. I'm selling the 66.40s and I'm buying the 66.35. And that's going to cost me $455 to do. And I'm buying 30 of them. And let me rewind it a little bit. So it cost me $455 to do one, and I'll make $42. And this is a paper trading account where I just run a bunch of my strategies because right now I'm pretty much all in crypto. Fast forward it. So to do 30, it cost me $13.6 on $154,000, and I'll make $12.79. So considering this is about $200,000 account, only using 13,000. That's not a lot. And now I'm gonna do a naked put or cash secure put on AAL. So same thing, not going through the strategy of why I'm buying what I'm buying or selling what I'm selling. But just like I showed you earlier, selling the $12 strikes and collecting $18. So it's gonna cost me $11.82 and I'll make $17.35. And the expiration is this coming up Friday, which is September 26th.
And then I did it again on AMDL, and I bought the $10, I believe. The $10 strike took a $25 credit, so it should have cost me around 900. Oops. So you can see it cost me 975, and I collected 24.35. So the way it looks now is you can see under cost is how much I stand to make if it expires worthless. And I don't show you, but I actually double up on this. So you'll see right now in the market close is going to say like 2,500. So let me go to actually let me go to the market close right now. So here's the market close just to show you real quick. 2,500 was the cost, which is how much I stand to make should it expire worthless and I don't close it sooner. So yes, I let it expire worthless. The market closes in the next 2 seconds. I just made $2,500, which is about 0.88% of a 2,900 or $291,000 account. Which, if you know how these paper money accounts work, they give you $100,000, and then I actually have a margin account that's 100,000, and then I have the IRA account that's 100,000. So total, I started with 200,000, and over the past month and a half, going on to 2 months, I've made 99,000 just doing credit spreads on here. So yeah, and there you go, market close. So when I do the weekly update on my crypto stuff, I'll come back to this paper account and show you how these weekly puts play out, where they get assigned or if they just close and expire worthless. But as you see, these expire worthless. So I made 100%. Market's closed, and that's pretty much it.